Welcome to this weekly update. I'm Julia Lee, an equity strategist with Bell Direct. And this week we have seen the potential US interest rate rise in December in focus. And as a result, we have seen a sell-off in those high-yielding bond proxy type stocks. So the telecom, utilities and the property sectors have all come under pressure this week. On the flip side, we have seen gains in stocks like QBE Insurance as well as Computershare. These are stocks that typically benefit when US interest rates are rising. But the energy sector has been a standout this week as oil prices continued to climb and the Australian market also higher for the week. Having a look at the Australian share market, and this is over a 1 year basis, and you can see that the Australian market has been in an upward trajectory since February. Morgan's saying that, look, currently we are approaching resistance at 5,570 points to 5,600 points, and around these levels are where we are likely to see selling arise. However, as long as 5,192 points remains intact, the uptrend still intact. Of course, one area on the market that has been hammered this week is gold as well as gold stocks. In fact, we have seen a more than 10% decline in stocks like Northern Star, St. Barbara Mines, Resolute Mining, as well as Evolution. So given this backdrop in terms of gold, let's have a look at the technicals for gold. And this is gold traded in US dollar terms. Look, Morgan's saying that there is potential downside to 1,234 US an ounce as a target. But on the weekly charts, that weekly uptrend still in place. The key is 1,199 US an ounce. And as long as that price holds, then the uptrend is still intact. It sees the current weakness as well as more potential weakness as an opportunity to buy. Of course, we are entering into third quarter earnings season over in the US, and UBS saying that the consensus for third quarter earnings is for another decline of 0.8%. But with 2017 look like it might be a positive earnings growth here, the focus will be on guidance. UBS says in favor are high quality, sustainable yield type companies. It's cautious on the healthcare space going into earnings season, and it thinks that there will be pressure in terms of the utility sector as well as consumer staples this earnings season. Looking at Morgan's and their model portfolio, and Morgan's still overweight in terms of resources. They were underweight back in April, but changed to an overweight position in August. And now they've also added to positions in their model portfolio, adding to their BHP, Rio Tinto, Woodside Petroleum, Oil Search, South 32 and Western Areas positions. But they have exited Vocus and consolidated their TPG holdings. Looking at Credit Suisse and energy has been a standout this week, and Credit Suisse saying that Oil Search still remains their top pick, saying that the Papua New Guinea LNG project does remain very economically stable and is the best new LNG project in the region. They have a buy on Oil Search with a $7.40 12-month target. Looking at Macquarie Equity Strategy, and they have focused in on the financial sector, saying that in financials, banks are their preferred stocks in the financial space. They are overweight ANZ, Commonwealth Bank as well as Westpac. They're using QBE as an interest rate hedge and offsetting that with an underweight position in the property sector or the A-REIT space. Bank of Queensland, of course, came out with its full year numbers this week, and having a look at the brokers and their recommendations, most broking houses remaining on hold for Bank of Queensland, but UBS coming out with an aggressive sell on the stock with a $10 target. Elsewhere around the market, Bell Potter having a hold on the stock with an $11.90 target. We have Ords with a hold with an $11.25 target, and Shaw with a hold with an $11 target on the stock. And finally, just focusing in on one more stock, and that's Blue Sky Alternative. BLA is the stock code here. Morgan saying that the strong macro backdrop is good news for BLA. And in terms of assets under management, quarter on quarter has seen an increase of 14%. Morgan's has an add with an $8.70 target on the stock. So all in all, it's been a positive week for the Australian share market, but with the potential for US interest rates to rise in December being very firmly in focus, it has been those high-yielding bond proxy type sectors which have seen a step back this week. So telecom, utilities, property coming under pressure. On the flip side, stocks like Computershare and QBE, which should benefit from higher US interest rates, also benefiting in terms of share price action this week. I'm Julia Lee from Bell Direct. Thanks for joining me. Hope to see you next week.